Hello YouTube and welcome back to YFP, your final piece in your trading journey. So in today's video, we'll be covering some of my entry models that I use on the asset classes GBP USD and Euro USD. Now, once price has taken out one of the three liquidity locations that I've showed you in our previous video, so just to recap, our daily highs and our daily low, our same day external and our internal range liquidity, this is when I will drop down to a lower time frame to identify the one of three of the entry models that you can currently see on my screen in price in real time. Now, as an SMC trader, I literally know there's so many concepts and so many points of interest that you can choose from. However, the downfall to a trader in the smart money world is not having a set of rules or an edge wherein the trader can filter out low probability trades, or they haven't or don't know what confirmations to take before entering the markets. It's purely based on intuition, which in my opinion, guys, is a recipe for disaster. Now, by having multiple proven entry models and techniques, this will allow you guys to filter out your low probability trades as you are looking for set rules and confirmations before entering the market. Okay, so without further ado, let's jump into the charts. So these are the three models that we're going to be identifying today, and I'm going to be showing you across Euro USD and GBP USD. So starting with Euro USD, let's just build some narrative before we dive into the entry models. So just to recap, we've taken out our daily high here. Now, obviously, as we can see, the flow of price is bearish, right? So we're delivering lower highs and lower lows. So the order flow in price right now is delivering bearish order flow. Now, with that in mind, we need to be identifying manipulations to the upside, not to the downside, as the downside is going to happen inevitably as we are in bearish order flow. So when we see a manipulation to the upside, this is where we can start framing our entries from. Now, as you can see here, this was our quote unquote inducement. However, to a lot of other SMC traders, this would be a break in structure, wherein they will be inclined to start buying from these lows or POIs within this internal range. Now, when we're looking at price, what has price done here? We've actually tapped into a H1 fair value gap to the left and also taken out a daily high liquidity point in the markets. So from that narrative now, from this high, we are looking for shorts and we're focused upon shorts. Okay. So leading on to the next day now, we can see that price has hunted our internal range liquidity, which is here, okay? Now, this high is our internal range liquidity because if you look at it, it hasn't really even mitigated the supply yet. So it's just been left there for liquidity, for obviously price to purge and to build up orders around this high, okay? Now, going to this channel that we can see here now, we can see that price is slowing down within this range and starting to consolidate. And this is where we are seeing early sellers participating within the markets. Now, why can we assume that early sellers are participating in the markets here? It's simply to the fact that because price didn't tap into the supply zone yet, we've started to accumulate early sellers just below this supply region. Now, bearing this in mind, if price did tap into this supply region from this high, right, I would expect price to travel quite fast, as shown here, to reach its objective, which would be these lows, okay? Now, because we didn't do that and price was just building up, we can assume that this is our build-up phase. So this is where early sellers are participating within the markets. Now, a rule that I have is, when we're looking for this model, which is our entry model 3, which was this one here, just show you. So this one here we're looking at, we need to confirm it with a series of rules, okay? So first rule is, from the high of the build up, we want to see a sweep of in the range of 5 pips. So we want to see a sweep in the range of a 5 pip distance. We don't want to see it going above 5 pips, just because in my experience from data, that is not a sweep then, that would actually carry on momentum to the upside, okay? So from that, we've obviously confirmed, okay, our first set of rules, that we've had a sweep within a 5 pip measurement. Now our second rule is, we will use our divergence indicator to identify if we actually have divergence. So as you can see here, guys, I'm going to pull my chart up, pull this one up as well. We can see that if we align this high on the RSI to this high on price, we can see that from here to here, okay, we're looking at this sweep now. So where was that sweep on the RSI? It was here, okay? And where was it on price? It was up here. Now, as we can see on this indicator, we are indicating that price has not made a new high like it has been displayed on price. We've actually made a lower high, okay? Which is essentially showing us weakness for the buyers, all right? So it's signifying that a sweep has happened in the market and the market has got a strong probability of now reversing in the opposite direction, okay? So this is one of the entry models that you can see, even if you go back on price yourself, you'll be able to see countless opportunities and countless variations of this model that plays out, and you can use it to your advantage now. As soon as price makes this divergence and taps into this POI, so this buy to sell that took out internal range, we can start assuming that sells are going to play out, okay? Now, if we drop down onto a 5-minute, you can see that as soon as price tapped into this supply zone, we literally had an aggressive melt. Okay, so all of this straight down to the Asia low. Okay, now our bias is still going to be bearish, even though this candle came all the way down and approached the market in a sell side, but in a sell side candle, but then closed in a bullish candle. That is essentially just manipulating buyers from these areas to create more liquidity before taking out the lows. Okay, now I get into the market as soon as I see price start rejecting. Okay, so as soon as price starts rejecting from this POI, I will sort of be inclined to enter with a 5 pip stop loss. Okay, so usually as soon as I start seeing this rejection, that is where I will be entering the market from. Okay, now moving on to GBP USD, what we can see here is that this is our entry model 2 and 3 combined together. Okay, now I'm going to explain why, but let's just break down narrative so you guys can understand what we are looking for. Now, again, what has happened here? We have hunted our previous daily high, so our daily high has been taken out, okay? And we have also tapped in to a higher time frame demand pool. So if we are marking out, for instance, these wicks here, which on a lower time frame I'll show you is an OB, we can see that price has hunted this external setup, okay? So we have this external high that hasn't tapped into supply. So the same narrative as EU, right? We've always got this liquidity sponsoring a POI. As soon as we see price hunting inside of that POI, okay, this is where we can start framing ourselves from. Now, the next day coming into the market now, because our narrative is sells, our manipulations need to come in this sign of buy side manipulations, okay? So what we can see here is price hunted this internal range liquidity into a 5-minute fair value gap, okay? As soon as price hit into that 5-minute fair value gap, we can see price started showing us signs of lower prices, okay? But let's just dive into this price action and let me show you something a little bit interesting, okay? So from this high, what can we see? We can see a high being taken out, okay? We can see these lows being taken out, okay? Now, within this range, guys, where is the last high before the main high, okay? The last high before the main high is here, okay? This is where we'll be looking for an internal range of liquidity to be grabbed and mitigate the extreme and continue on to lower prices, okay? So what we can see here is a high being grabbed, a low being grabbed, and then if we drop down onto M1 now, just bear with me, drop down onto M1, we can see it a lot more clearer. So we have our buy side grab. So this was the first sweep that swept the internal range liquidity to the left. We had a pullback, price hunted that high, hunted the low. Before we hunted that low, price created this sort of pullback of price here. And what we want to see from this high is price hunting it, okay? Price hunting it, mitigating into an extreme and continuing to lower prices. Now, this was a trade that I actually caught. I'm going to pop up the screenshot on the video. So I caught the aggressive position was caught here by one of the students. However, I actually went on and caught the trade within this range because the same exact entry model that I showed you that played out here actually played out here as well, guys. So let's just dive into that so I can show you what I saw. Now, where are relative equal highs within this range? Okay, so off the bat, I can literally see that we have relative equal highs that are here. Now on Oanda, this was actually more prevalent. I'm using forex.com just for the purpose of this video, as I haven't got any chart drawings on forex.com, but I had most of my chart drawings on the Oanda chart. Now, what we can see here, price has hunted these highs, okay, with a very nice sort of vector candle, which I've explained in my previous videos, okay? Now, what we can see from that high is we need to mark out where was that inducement from, okay? So the inducement happened from this low, okay? So after price has come back down to take out this low, we can start assuming that price has had a shift, okay? Now, the same concepts apply. Where is the last high before the main high within this range? It's right here, guys, okay? Now, as soon as that high is taken out, especially because we're on the M1, I am going to take that as soon as price takes out this high. My stops are going to be above this, okay? So around a 4 pip, 4.5 pip to 5 pip stop loss, that is fine, okay? My stops are above this high, okay? This is a picture of this move in real time. So you can see that we have equal highs. This was the low that broke it, okay? This was the last high before the main high, and we can see price tapped into it and absolutely melted, delivered lower prices, okay? So that was an example that I posted into the Discord in real time, okay? So my members had the opportunity actually to catch this move with me, and as you can see, guys, we did create sufficient price swings to the downside. So from this high here, that was the buy side grab. So where the arrow was is where the entry was. You could have easily caught around 50 pips from that swing. So an easy 1 to 10 R could be earned, which, guys, if you're risking 1%, is £10,000 back on a 100k account. Okay, now there's actually entry model 2 within this range as well. Okay, so if we go back into this now and I just delete all of this chart work off, obviously we have the same narrative as before. So prices hunted this previous daily internal, etc., etc., our internal range liquidity, and bear with me. So we've hunted this, and now what we can see here in entry model 2 is that price hunted buy side. Okay, so this is the higher fractal. Okay, so the high time frame fractal, and price then took out the lows. Okay, now as I said before, what we need to see when price is hunting buy side and sell side is essentially, you see up here where we had this imbalance. Okay, when price cut through in the same way in the way back down, we also had imbalance on the way back down there as well. So we had imbalance on the way up and imbalance on the way down. Now, if we drag this along, we can see that no bodies were actually closing above this zone. There was a very sensitive area. All price wanted to do was collect orders from this area to push price lower. Okay, now that will look messy to a lot of traders, but for us, we're used to price doing this sort of manipulative price movements. Because, guys, you have to understand, for price to go in a certain direction, there has to be liquidity available to grab in the other direction, which means that there needs to be traders that are being tricked into thinking the market is bullish, which from this range, you can see that price has left this FU candle here. You can see that we've had a reaction as well. So buyers are definitely participating within this range or price there. Okay. And you can see as soon as price essentially shows us this model. So there's multiple models here. So we could have even played a simple model from understanding from as soon as price took out this high and tapped into this edge, we can start stacking our sell entries from here, which one of my students did. Now for me, I wanted a bit more confirmation, hence why I started entering the market from here. Okay, just because order flow was built up and I had more confirmation and more confidence to execute that idea. I'm going to throw a screenshot up on this on the video. So I think I profited about 6% on that trade, which is super good. You know, if you can make 6% even in a week, guys, over a period of a month, you're laughing, guys. You're literally going to be laughing to the bank. Okay, now that was the sort of entry models that I personally use to stay safe in the markets and stay probable and allow my results to compile. So even though if I'm taking losses, by following an edge, okay, my probability will align eventually. Okay, so if I've taken 2 losses, one of those wins will outweigh those losses, therefore the probabilities have aligned. Okay, now by having a mechanical edge in the markets, it doesn't mean that you're going to be winning every single trade. Okay, it's more so there to allow probabilities to align, like I've already mentioned, throughout a series of 10 to 20 trades. Okay, now I want to pull up a little short paragraph by Tom Hoggard, which he's mentioned in his book, The Best Loser Wins. And what he suggests is, I'll just read it out. So he says that instead, it's about losing. Your relationship with fear and adversity will, to a very high degree, define your life. That's why I win. I win because I'm really good at losing. In trading, unlike life, it's the best loser that wins. Do you think a dentist or a doctor would be in business if they had a 60% win rate? Of course not. But a trader can thrive and prosper on that kind of success rate as long as they are prepared for it. Most are not. Okay, guys. So we have went over 3 different entry models that can be used to show proven profitability in the markets by following a set of rules which filter out a lot of random or subjective trades. Now, by keeping things objective, this will breed discipline and consistency within your results. So if you guys want to personally be mentored by myself and have full Discord access where I host live calls throughout the week going over trades in real time, hit me up on my Instagram. It'll be in the description box below and I'll get you started with the team. As normal, guys, thank you so much for tuning in. Please leave a like and a subscribe as it will generally help spread the awareness of the value I'm literally dropping to all of you guys. And as usual, I'll catch you in the next one. Peace.